Welcome to Real Estate Today. I'm Koolik, and today's show is going to be really interesting. All of us have had issues with hurricanes and flood damage and those kind of things. So today we're going to be talking about homeowners insurance. It's a really confusing topic, and we're fortunate to have Lisa Pasillo. She's president of All Risk Insurance, and she's a licensed insurance broker, and she's going to help us really figure out what we all really need to know. So stay with us, and welcome to Real Estate Today. Welcome back to Real Estate Today. I'm here with Lisa Pasillo, president of All Risk Insurance, and she's going to help us really get down and deep as far as what's going on with homeowners insurance. And I have to tell you, I can't tell you, I'm in the business and I'm confused. So I can only imagine what it's like for everybody. So Lisa, thanks for coming on the show.
Thanks.
I'm looking at a homeowners policy right here. And it's kind of funny, I would venture to guess that the majority of people really examine this once they have a problem.
They probably don't even do it then.
Right. So let's kind of try and break this down and explain to me and to everybody at home what you need to really understand and what type of coverage do you really need to get, whether it's a single-family home, townhouse, a condominium, an apartment. So talk to me about all the different types of coverage and what people should know.
Okay, well, first of all, if it's a purchase, you always are going to be told by your real estate agent, by your bank, by your mortgage company, they're going to tell you have to cover the mortgage amount.
Okay.
That's not necessarily true. You do have to be insured for 100% replacement.
Of the structure?
Of the structure. That's not including the land. That doesn't mean what the houses are selling for in the neighborhood. It means what it would cost to rebuild your structure if it either A, burned to the ground or got swept away in a hurricane.
Okay.
Okay, now depending upon what company you go to, as far as insurance company, every company has their own replacement cost estimators.
Right.
And for example, you would tell them what year the house was built, the square footage, and whatever amenities you might have, whether it be marble flooring, whether it be custom kitchens, bathrooms, garages, fireplaces, things like that. That's all put into a form into the computer, and it spits out a replacement cost.
Now, when they figure out that replacement cost, what are the guidelines that they're using that might be different than another company? I mean, is it all pretty similar?
They're all pretty similar, give or take probably about $10,000, $20,000. Certain companies will allow you to over-insure it up to 20%. There are companies that will allow you to under-insure. I personally, at our agency, we won't even do that. I would rather lose a customer than not give him what was in the best interest of what they need to have.
Because at the end of the day, if they have a problem, it's going to come back to you.
Exactly, and people don't understand that you might be saving a couple of dollars now, but the reality is if you have a loss, what's the point of buying a $4,000 piece of paper if you're not going to be able to replace what you have?
Well, that's, obviously you're doing the right thing, which is in their best interest. So so someone buys a house, I sell them a house.
Okay, you sell them a house.
Okay, sell them a house for $500,000. Tell me what amount of insurance would they need for that type of house? I mean, they have to ascertain what the value of the land is.
First of all, you could go, well, basically, if it was a purchase, you would have an appraisal being done, assuming that a mortgage is being obtained.
Okay, so let's presume they bought a house for $500,000, they put down 20%, $100,000, and they're getting a $400,000 mortgage.
Nothing to do with it. On the appraisal, if you look on the page that there's the comps, there's usually a space that says estimated cost new. Okay. Which will give the square footage at X amount.
I understand.
And that's the amount that you need to be insured for.
Okay.
Okay, so now a lot of times, coincidentally or not, that usually is somewhere thereabouts the mortgage amount.
Okay, so let's go on the assumption it is.
Okay, so let's say, for example, you were insuring a house for $300,000.
Okay. The
person, the broker, whoever, would contact their agent.
Well, in this example, I said they bought a house for $500,000. The mortgage is $400,000. So let's presume that it wasn't $300,000, but it was the mortgage amount was $400,000. The lender is going to require that to be covered?
No, the lender will require you to have a policy that states that it is full replacement cost, which any of the carriers I deal with automatically have full replacement cost. They will not allow us to insure underneath it. Now that's just for the dwelling portion of it.
Okay.
So people just say, okay, well now what else do I need? Well, if you look at your policy, which is the one that you have there, it'll say coverage B, which is other structures. Other structures you're not being charged extra for, it's included in the price of the premium. Other structures is 10% of the dwelling amount for most companies.
What is an other structure?
It's anything else on your property other than the actual house itself.
Now, most houses, we don't have a lot of land, at least in Boca Raton or the surrounding area, so what other structure would there be?
There could be a swing set.
Okay.
There could be a shed, perhaps.
Okay.
Anything that is not attached to the physical dwelling. That's another structure.
Would you say there's not as much of that? I mean, let's say within Boca Raton, we don't really have that many other structures except for maybe a swing set.
No, you may not, but again, it's something you're not being charged for.
Okay,
so it's automatically included.
Okay, next.
Now, for coverage C, which is personal property. Okay. Personal property is your stuff. If you shook your house or wherever you live upside down, whatever would fall out is your things.
So nothing attached?
Nothing attached. So your kitchen cabinetry, your flooring, your bathroom vanities, your toilets, that's all part of your dwelling.
Light fixtures? Well,
light fixtures are part of your dwelling. They're permanently affixed. Okay. So, when you tell people what they need to insure, they say, well, I have a $50,000 kitchen. Well, that's not your contents because that's not going anywhere. Okay. Your personal property is your stuff. Now, there's two ways you can insure that. Full replacement cost and actual cost value. Full replacement cost obviously will cost you more money. However, if you do sustain a loss, you will get the money that you need to replace it what it would cost today. Okay. As opposed to actual cost value, it would cost you what it was when you bought it, minus depreciation.
Okay. Tell me briefly, because I want to wrap up this segment and we're going to talk about some other things, about wind and storm, rising water, flood insurance. I mean, how does that impact this type of insurance?
Okay, a regular HO3, HO6, any dwelling policy, fire dwelling policy. Flood water is rising water. Flood is not included in a standard insurance policy. It is through a separate policy, separate organization. Every policy is written through National Flood, regardless of who services it.
Do you always recommend that to every?
It's not that I recommend it. In a condominium situation, you don't need it. There's a master policy.
I understand.
In a house, whether or not you're in a flood zone or not, we're all on a swamp. All of Florida is a flood zone. Okay. So even if somebody doesn't say that they need it, I always say, well, it is an option to you. It's not that expensive. It's generally under $500 a year. So and it's something to have because things do happen. Okay, well,
in the next segment, I really want to, and thank you for really explaining that, because I don't think it's really ever explained, in that detail. So I'm sure everyone appreciates, the level of detail you're giving us. In the next segment, I want to talk about, the choices of what type of companies that everybody at home can consider, whether it's the state fund or some private companies. So, Lisa, thanks so much.
You're welcome.
We'll be right back with Real Estate Today.